with the Nifty hitting that 26,000 pin code just at the end of trade, gaining the last 1,000 points over 37 sessions alone. In fact, metal stocks were on the rise today with the likes of Tata Steel and Hindalco, and it is the metals pack that really gave that much needed push to the markets today. And at the same time, it seems even as though Indian markets are becoming dearer to foreign investors, with investments worth 5 billion in just September coming in so far, much more than other South Asian markets like Indonesia and Philippines, according to the data that we have compiled. The big question then is, what is behind this rally and how long will this rally sustain? Will it just be on the back of FIIs or DIIs? Let's decode all of that and more with our guests who are joining us live tonight. That is Ajay Bagga, market expert, and of course Mayuresh Joshi, the head of equity Marketsmithindia. Thank you very much, Mr. Bagga and Mr. Joshi, for joining us on ET. Now, let me come to you first, Mr. Bagga. So Nifty hitting the 26,000 mark for the first time today, and we've seen a stellar rally, especially in the past few days. You know, that point of 25,000 being breached and this 26,000 point being achieved in just these past few days alone, and that really is what is the defining moment about this rally. But let's first understand what is really driving that optimism, what is really giving legs to this rally.
It's a combination of a good macro, strong corporate earnings, as well as flows. So if you look at especially the domestic flows, we have got more than $50 billion, nearly about 3.4 lakh crores of domestic investments into our markets so far till September. So that is one big driver. The FI outflows have reduced, and now we are at a net inflow number for the year. And as the FI flows pick up, post the Fed rate cuts coming in, we are going to see more FI flows coming in. The final point is the ranking of India in terms of the MSCI indices. We have reached a number 5 level in MSCI World Index. In MSCI EM, we are just behind China on the large cap, mid cap, and on the investable market index, we have overtaken China. So about 19 to 20% of EM allocations are theoretically coming to India, but India remains an underweight. So there is a lot of catch up possible because of our valuations. A lot of global investors have been underweight India, but as the market picks up further, you're going to see those flows also coming up. So a number of reasons, from macros to corporate earnings to the flows, yes, and to the change in the FI flows.
Absolutely, Mr. Bagga, and a lot of that has really been helped by the kind of Fed rate cut that we saw. And of course, everybody has been bullish on India, in the EM index as well. On that point, let me come to you, Mr. Mayuresh Joshi. Mr. Bagga made a very valid point about valuations. There's been some caution so far as valuations of, Indian companies are concerned, especially in the mid and small cap segment. And yet, on the other hand, nobody wants to miss this bus. Nobody wants to miss this rally.
Oh, absolutely. And as Ajay rightly mentioned, I think there are a lot of supporting factors that are aiding and abetting the kind of momentum that we are seeing in the markets. Obviously, I think global cues have been supportive so far, and macros and micros both stand out for the markets. Add to that, the domestic liquidity continues to be extremely strong. The MSCI rebalancing that we saw last week also added a little bit of spice to the overall foreign liquidity expected to come in. And even from a foreign institutional investor perspective, whether it's the FPIs or the FIIs, if you're probably talking about emerging markets, India is the best placed market at this juncture, with China clearly lagging on macro indicators, and a lot of other markets which are more commodity driven, not having the depth in terms of diversity that India probably has to offer. So yes, I think a lot of factors at play that are driving this momentum for Indian markets.
And it's stunning, Mayuresh, that this 1,000-point rally was achieved in just 37 sessions, and that is really, really great so far as today's bull run is concerned. But Mr. Bagga, these overall projections of the Indian economy. I mean, Mayuresh was speaking about how India is one of the most favored markets so far as EM are concerned. The economy is on a solid ground. Monsoons have been great. There is exuberance coming in on rural demand as well. So the outlook largely remains positive so far as the next few months are concerned. Do you agree with that? Is the party expected to continue, or is there a case for correction? And if so, how soon?
Very, very tough to say. Definitely, there will be corrections, but it's a 20-year party that we are getting into. So all I would say is don't miss the bull run and stay invested, invest regularly. That's the mantra that has worked, and that will continue to work. Will there be a correction? Normally what happens in the month before the US presidential elections, we do see the US markets going soft, and then they pick up once the results come out. But in case it's too close to call kind of a result, we could have some trouble post the 5th November US election. So that could be one catalyst. We have a full month of earnings before that comes in, and we'll have data this weekend. This Friday we'll have the US PCE, and then next week, next Friday, we'll have the US jobs data. I think those two will be market moving. China's stimulus has already come. We were expecting that to have a positive impact, but now China is shut for 7 days. 1st to 8th, China will be shut for its holidays.
Absolutely right, Mr. Bagga. Mayuresh, let me come to you on that. Do you agree with what Mr. Bagga is saying that it is a 20-year bull run? But what is your near-term assessment of where India stands at the moment?
Yeah, I completely agree with Ajay. I think he is a master of most topics when it comes to macros. Having said that, I think a large element in terms of how India is placed over the next decade. I think the expectations in terms of fiscal policy is expected to continue, is one of the strongest pillar for any economy globally. Political stability, specifically past the general elections, seems to be a high probability case at this juncture, where you've seen a lot of instability happening on this front as well. Post-COVID, this year from an earnings perspective, maybe the high base of the last couple of years might play out in terms of how earnings play out. But with the decent monsoons that have taken place, the expectations of a rural discretionary spending recovery expected in the second half would largely augur well for most parts of the discretionary spending sectors that India Inc. was worried about a few quarters back. With Fed rate cuts, the expectations in terms of our services sector, specifically IT services, should come back to the fore as we head into the second half. And there is some element of recovery expected in key sectors like BFSI, retail and manufacturing. The government thrust in terms of the CAPEX program, 11 lakh crores earmarked in terms of capital spend, clearly means that infrastructure, manufacturing is going to remain on top of mind. So yes, I think a lot of factors are in India.
All right. So infrastructure and manufacturing is something that you are really bullish on. But Mr. Bagga, where do you see investors fishing now, and where will the next bull run come from aside of these cyclicals like autos and banks? Because we are seeing the government come out with policies for new sectors as well, whether it's AI, whether it's semiconductors, whether it's clean energy. So where do you think this next bull run, this next leg of bull run will come from?
See, globally, the two big trends are going to be AI and renewables. We are well positioned there. This year, in fact, in terms of solar, we'll grow 73% year on year in terms of solar rollouts. And all companies connected to the renewables are going to do well. AI is coming very strongly. Just yesterday, we saw GE Aerospace announcing a pact with Microsoft for all 50,000 plus employees to use AI within GE. We are going to see that being enabled by our IT companies also. So IT has bottomed out. It's on the cusp of a takeoff like what we saw in 2000 after the Y2K. we are sitting on a similar opportunity. You will see that opportunity play out. So those are the two global trends, AI, renewables. Within India, what you mentioned earlier, heartily agree with that. Rural demand coming back. I think the next 6 months, the two-wheelers, tractors, consumer durables, FMCG, all are going to rally on the base of rural demand. Financials are evergreens. Those will continue to do well. And then the 40 lakh crores spent in infrastructure, that's coming home and delivering 20-22% tax growth year on year. That is going to continue with the kind of investments the government has made and continues to make. So all those manufacturing, infrastructure, railway stocks, only caution is
Right.
the valuation. What we saw in defense
Right.
and railways, valuation running too high. There you have to be careful.
Right. So valuations is really a concern, but overall, these are some of the sectors Mr. Bagga is mentioning. Mayuresh, what is your overall assessment of the kind of policy push that India now needs? We've seen the government, go all in so far as this area of semiconductors is concerned. In fact, just yesterday when the Prime Minister was in the United States, 2-3 semiconductor pacts were announced. In fact, there was a Quad MOU as well that was signed in the space. Defense as well is a moving sector as well. But what else are you recommending in terms of policy push by the government is concerned? Because let's not forget that this rally has also been because the government has been well timed so far as getting into newer sectors and giving the kind of policy push that is needed is concerned.
Oh, absolutely. And one point to note here is the PLI schemes. Very clearly, I think a lot of PLI schemes have been announced for key sectors. And with the announcements that have probably happened, I think that lays impetus to the kind of growth that can come through. Clearly, a lot of commentaries that we have been hearing, whether it comes to specialty chemicals, whether it comes to textiles, there is this need for China plus one. And with the PLI schemes that the government has announced, a lot of these sectors get a push through in terms of backward integration. They can manage their supply chain logistics pretty efficiently. And therefore, I think countering China plus one when it comes to demand dynamics laid out by a lot of EU and other countries as well. I think India is well placed in terms of probably satisfying a lot of demand that can probably come through and therefore also aid our export revenues to a certain extent, which are highly dependent on IT services at this extent. So yes, I think apart from all the measures that we've probably spoken about, PLI schemes, signing of free trade agreements with a lot of countries over the next few quarters and years are going to create that impetus that is required for a lot of key sectors like textile, like manufacturing, like industrial machineries.
Absolutely. And, it's really heartening to see, Mayuresh, the kind of outreach that the government is making to newer geographies to increase its exports, beyond just our top trading partners like UAE, United States, etc. Mr. Bagga, I want to come in on this view on FIIs versus DIIs. I mean, domestic flows are largely to be credited for this growth story that is playing out, even though it is just 5.8% of households that are into equities versus bank deposits. But when it comes to FIIs, are we at a turning point when it comes to fund flows? Is that trend to continue? Will you see further outperformance in the near term?
Yeah, we will see. Normally, it happens with the Fed rate cut, emerging market flows increase. And with us getting a 19-20% market share, which right now most of them are underweight. So we are an underinvested market. As the flows revive, you will see that happening. If you look at the last 2 years and 9 months of this year, 11.5 lakh crores have come in from domestics, while 5.5 lakh crores net outflow from FIs. Earlier, we would have had very sharp corrections in the Indian markets on the base of such a sharp outflow from FIs. We have not only domestics have overtaken FIs, but on a month-on-month basis, we are gaining market share. That's stabilizing the whole picture. And this is 1981, Ronald Reagan started 401k plans. The entire US mutual fund industry was $60 billion. In the next 2 decades, it became such a massive industry. And today, there are particular fund houses which are 9 trillion, 11 trillion kind of size. We are at the cusp of that. That's why I said it's a 20-year bull run. It's not, we might have corrections and some steam going off. but it's a 20-25-year bull run that we are sitting on. And the base of that is this: households coming into equities, tasting success, and it becomes a self-reinforcing mechanism, a self-fulfilling prophecy. A virtuous circle is what we call it in economics.
All right. So the message is clearly out, and that is that the long-term growth story of India is intact. And like Mr. Bagga was stating, that 20 to 25 bull run is something that investors should brace themselves for. On that note, thank you very much, gentlemen, for joining us this evening on ET Now.
If you like this video, then like, share and subscribe to ET Now.